pleased to welcome you to today's webinar. This is kind of a new series that we're starting. We're, I guess, like any organisation, we're always keen to look at what we've done in the previous year, and we're always keen to adapt. And we know that finance is still a significant question and issue for a lot of organisations out there. So we're starting some new finance-focused webinar sessions as we move forward, and this is our first one. So some weeks sometimes there'll be funders that come on. Sometimes there might be sessions about managing finance with business expertise coming on. But today we're really wanting to focus and talk about kind of, I guess, ethical banking, opportunities that exist in terms of links you make with financial organisations. And I'm really pleased to welcome John and Mark, who are both joining us from Unity Trust Bank this morning. So they're going to be taking us through a little bit about what Unity Trust does, I guess, in terms of, and looking at that ethical finance kind of framework. It might be a slightly shorter session than normal, given we're trying to keep that focus, but we are still here for any questions, so we won't be rushing you through. If you've got any questions, please just do pop anything in the chat and we will try to get back to you. So I'm going to pull the slides up because I'm doing the slides for John and Mark today, but I'm delighted to hand over to them. And I think, John, you're starting us off, so I'll put your slides up and then we'll crack on with today's session. Thank you both for joining us.
Thanks, Naomi, and thank you to yourself and Duncan for allowing Mark and I the opportunity to talk to your members today. It's been a difficult last 12-18 months, and I've just about got used to this form of medium of communication. We were talking just before the webinar started of how we've all missed the face-to-face contact and the sort of pleasantries pre and post meetings. And I've just realised I've come into the office here. I'm based in Manchester, and the first day I've come into the office for weeks to ensure I have a good internet connection. I've got some workmen outside doing the air conditioning, so if you're hearing some banging and drilling, I do apologise. It's some work that's being done in the office here. So my name's John Copping. I've been in financial services and banking for about 37 years. Majority of that time has been at the Royal Bank of Scotland, but latterly, the last 15 months, it's been at Unity Trust Bank. And my role is I manage the North team, which consists of 7 relationship managers, Mark being one who I'll introduce shortly, and then 2 assistants, and we cover the Northwest, Yorkshire and Scotland. So I'll very quickly pass over to Mark, who's, you can tell he's only probably done about 2 or 3 years straight from university. Mark?
Thank you, John. I wish I've got a similar length of time in banking as John, so almost 40 years. And I've been with a number of institutions, but predominantly I've been a property banker, lending in all types of property from commercial investment, residential investment, through to housing association business, together with social enterprises, which I find very inspiring. And it's an area, I think, certainly for me as a person and as a lender, and I can speak for the bank, it's an area that we want to develop and encourage. So this is a great opportunity for us to be speaking to you today, and thank you to Naomi and Duncan. And we look forward to giving you some idea of what banks can offer. I don't want to dwell on what Unity can offer. It's more a case of a more rounded presentation than that. I'll try and keep it as short as I possibly can, and we'll look forward to taking any questions at the end. Thank you.
Thanks, Mark. So you can see from the agenda that I'm really going to just be covering off the introduction, a little bit of Unity, in terms of who we are, how long we've been about, what our sort of strategy is. And then, as Mark alluded to earlier there, he will then cover off in terms of the fundamentals of accessing finance from not just ourselves, but just from the banking sector in general. Hopefully I'll be talking for 10-15 minutes. Mark will do likewise, and therefore hopefully create 10-15 minutes for plenty of questions that we'll we'll try and answer. If they're difficult questions, obviously Mark can do those, and I'll try and bat away the very easy questions. So Naomi, if you don't mind just moving the slide over, please. Thank you. So hope you can see that clearly enough. Unity is not a very mature bank in terms of what you would typically see as a bank. A lot of the banks, the high street banks, have been going around for hundreds of years. Unity was part of the Co-op bank at one point, and then it's become independent. Its head office is based in Birmingham, and effectively we call it offices in Manchester and London. They're hubs. I'm sat in the Manchester office here. It's only a small hub of 6 desks, and it's really a focal point for when we want to get the teams together. All the relationship managers are home-based, so we've been very fortunate that the pandemic has not really altered our day-to-day working practices as it will have affected yourselves and lots of other people. The bank has a fairly defined sort of double bottom line strategy, and what I mean by that is that having worked for RBS, it's a profit center. It's supporting customers, it's looking after its customers, but it's also about generating a profit. And Unity is no different. It's there to make a profit, but it's very clear that the customers it endeavours to support are ones that have a positive social impact. And what I mean by that is that our balance sheet is made up of charitable deposits. It's made up of trade union membership subscriptions. We've got about £1 billion worth of deposits, and we've lent about 600,000 against that. So we're self-financing as a bank. Our shareholders are trade unions, charitable organisations, not-for-profit organisations. And what drives our strategy is that for every single customer that we have at Unity, is that it will be around what they do, what they want to, what their purpose is, and are they aligned to our own sort of social criteria that we want to try and support as well. Naomi, if you wouldn't mind popping over the next slide, please. The way we try and do this as an organisation is we've aligned ourselves to the UN's Sustainable Development Goals. So Mark, for example, if he gets a proposition from a potential new customer of the bank, and that business is, say, a charity, then it's fairly well aligned to one of the UN's goals in terms of what the purpose of that charity is. Is it to try and provide education? Is it to relieve hunger? And again, with some of the propositions we get, we're ticking quite a lot of these sort of development goals as we go through. There are quite a lot of businesses out there and enterprises out there that we just have to do a little bit of digging to understand. So, for example, if there's a prospective business that we want to support that is creating jobs, especially in the current climate, the current economic conditions, if there are enterprises out there who are looking to recruit, that is a sustainable development goal about job creation and economic growth. Therefore, that would fit our social requirements. Things like apprenticeship schemes, businesses have apprenticeship schemes. Now, again, I'll refer back to my RBS days. When I would look at a proposition, it wouldn't even pass me by to ask those sorts of questions about what the social benefits are, and it's not something particularly proud about, but it was a fact. Whereas here, we could get the best at Unity, we could get the best possible proposition we can, unless we can identify that the purpose of our funding is to provide some sort of social benefit, we won't do that deal. And that is very different to a lot of the banks out there at the moment. So that is very much part of our DNA. So Naomi, if you wouldn't mind. And that's not necessarily just in relation to the type of funding and support we provide to our customers. This is what we try and live and breathe ourselves. So how do I describe that? Is that we review our own supply chain. Who are our suppliers? What are our suppliers' sort of ethical or social credentials? We have each and every single member of staff has the opportunity for volunteering and doing charitable activities on bank time as well as their own time. We have initiatives to reduce printing and reduce paper consumption and various different activities that we try and do to ensure that social impact is everything that we do during the course of our sort of banking working week. Naomi, if you could do the honours. We're not a big bank. I think our CEO describes us as a rounding error in terms of the banking market. And whilst we have a national footprint, we've got 16 relationship managers nationally. We have 2 in Scotland, and as we work our way down. So we do have an impact nationally, but we're still in this phase where we're still growing. We are still trying to increase our headcount and increase our footprint, because we do know that the more we can do, the better impact that we'll have in terms of trying to create a better society. Naomi? And again, what we try and do, and I'd welcome you to look at our website at some point. It's just a couple of examples here of businesses that we've helped to support in Scotland. Daycare nurseries, housing associations, local pharmacies, just to name but 3. But there's a plethora of those on our website, and where we can and where we work with the organisations and businesses that we support. If there's an opportunity to market their credentials, it's fantastic. We'd love to do those sorts of things as well. So Naomi, if you just go to what will be my final slide. In terms of the Unity's offering, I'd like to say it's glamorous and exciting, and it's very different to a lot of organisations. That's not necessarily the case. It's not true. We offer the basic packages that a lot of banks do in terms of current accounts, payment services, loans, that sort of thing. I think where, if I try to describe banking, it's about relationships, and it depends on what each and individual customer sees as being their importance or their priority. It could be, do they want to bank with a social bank? Do they want to bank with somebody who's got a local branch network? Do they want to have a relationship manager? Do they want a UK call centre? Is it about pricing? Is it about IT, technology, how being able to do things remotely? And it will differ from bank to bank, and it will also differ from potential customer to customer. So we have a fairly standard banking offering. We're probably not the most aggressive in the marketplace, if you understand in terms of how our balance sheet is made up of. If it's made up of charitable deposit balances, and it's made up of trade unions subscriptions, we have to be careful with their money. So we are a fairly prudent lender, but we want to look after and be a good custodian for those funds. So in terms of banking, it's very much around what is important to the potential new customer, what actually is it you want, and where. If it's like buying a house, what are your priorities? So that's a little bit about Unity. Hopefully I haven't waffled on for too long. At this point, I'd like to just, Naomi, just pass the slide deck over to Mark, who will talk about the different types of finance, etc.
Thank you, John. I'll just bring the next slide up for you, Mark.
Thank you, John. Thank you, Naomi. I would just like to echo John's comments there about banks in general. And before joining Unity some four or 5 years ago, I had never really worked in the social space with social enterprises, with charities, etc. And I found coming here that it's opened my eyes. And I've been very excited by the prospect of becoming involved and trying to give something back as a banker, I think we're all tarred with the brush of being greedy, which hasn't always been the case, but certainly working for Unity has been the exact opposite. And I think we offer a great deal to social enterprises, to housing associations, to charities. And as John says, we may not be the most aggressive bank in the market, but we certainly are prepared to listen. And it's a learning curve for us as much as anything else. And there's new markets opening up, things like renewable energy, particularly in Scotland, and other areas that are coming on stream that we haven't lent in, and I certainly haven't lent in. And you know, we would welcome the opportunity for anybody in markets that we're not currently involved in to speak to us and really, I think, educate us and help us understand your markets and what we can do for you. It's not just about what we want to do and what we want to impose on our borrowers. It's about listening to you as customers and as social enterprises, and learning and trying to partnership with you rather than just be your lender. But broadly speaking, looking at the slides, all banks offer the same or similar products insofar as lending is concerned. And as we all know, there's a plethora of banks out there in the market. But essentially, lending falls into two distinct categories, unsecured and secured. Naomi, if I can ask you just to move the slide on a bit, please. So in ordinary terms, overdrafts, which are on-demand facilities, and mortgages or term loans. We will all be familiar with these two products, whether from a business perspective or personal. The principal differences across the various banks tends to be entry level or minimum loan balance. And for Unity, our minimum loan balance is 500,000. The other terms and conditions there, the committed term 3 to 10 years, repayments calculated over a period of up to 20 years. These are fairly standard across the banks, but we each have our own unique sort of offerings, if you like. But I think it's more difficult to commit from the various seminars and the roundtable discussions that I've had and have attended. The challenge for social enterprises, I believe, is the commitment and the confidence to borrow. It's more difficult to commit the enterprise or the company to borrowing or taking on debt than it is when considering borrowing for personal purposes or personal reasons. But I think in order for the business to grow and develop, taking on some form of debt or funding is almost inevitable. And that's really where we come in. We want to partnership with you and enable your business to grow and develop into the future and make it sustainable and a long-term success. So how do you borrow? And what should we consider? What should a typical loan facility cover? If I can ask you to move on again, Naomi, please. Typical loan features. Pricing. There's nothing strange, although you maybe notice there non-utilisation fees, which, you know, we're all used to arrangement fees, we're all used to interest margins and variable rates and fixed rates. The non-utilisation fees is maybe the bit that sticks out there. And that's a fee that is levied on undrawn funds. If we're drawing money in stages or tranches, then the money that's not been drawn attracts a fee. Now, every bank will have that in their facility. But other information conditions, regular financial information, again, this is fairly standard. That would be management information such as year-end accounts, projections, etc., just what you would do for your own household budgets, if you like. But for a business, we're quite happy to sit down and help you with any budgeting you have to do and discussing your financial needs and requirements. And then financial covenants. Every facility carries covenants which are, you know, loan to value, serviceability. Again, it's the things that you do in your own mind when you're sitting down deciding whether you're going to borrow money. It's just about putting it down on paper, I suppose. So they're very basic, and it's the things you normally do for yourself. Naomi, can we move along again, please? So what's the cost of finance? I think this heading is slightly misleading. That tends to look at what the associated costs of finance or borrowing, legal and valuation fees, we'd all expect, but consultants and advisors, brokers, we may be less familiar with. So why should we consider using a broker or using an intermediary? Well, as we've previously mentioned, there are so many banks out there at the moment. When I first began banking, a bit like John, there was probably 4 banks in the market, all offering the same kind of thing. There is now, well, I don't know how many banks would be in the market. There's an absolute plethora of banks. And I think using a broker or using advisors, they're very familiar with the market. They're very well connected with the market. They know what banks are out there, what they're doing, who would probably be the most suitable bank for your requirements. So I think I would encourage any enterprise to look for the best advisor or the best broker and work with them closely, and they will introduce you to the relevant banks. I think that's very important, particularly borrowing for the first time. Can we move on again, Naomi, please? So what do banks want to know about social enterprises? Again, this is quite interesting, and I think, as I previously mentioned, there's new markets opening all the time. There's new things coming on. That, again, I mentioned renewable energy. We as a bank are learning. It's a learning process for us as well as yourself. So we want to discuss with you any proposals you may have, but we need to know who you are, what you're doing, why you're doing it, what experience you have, what support you're going to require going forward. Just generally, we'll be nosy. We'll be very nosy, and what we're trying to do is understand your business. And we look at your leadership team, who's in it, what experience they have. It's all things that you would guess we would be looking for. And again, it's things that would be in your own mind that you possibly haven't committed it to paper. So it's a general discussion and getting to know you and you getting to know us as a bank. I think these things are very important because I can't stress enough that I consider it a partnership rather than an old-fashioned banking relationship. I think we're all learning and we all want to move forward together and be successful. Naomi, can we move on again, please? So this is more about the same. We've discussed your values. We've discussed what you want to do, what you're looking to do, how you want to grow and develop. But we also want to know your financial background, and we also we're looking at historic accounts, where you've come from and where you're going to. So we're looking for projections, management accounts, budgets, bank statements if you're banking elsewhere. Again, it's just we're nosy. We're looking to see that the business can support any facility that you're looking to take on, that it can support it just now and going into the future, and how you intend to grow and how we can grow with you. So all of these things, again, it's like a personal budget. It's very similar. It's just looking to support the business and make sure the business is going to be viable and long term. I believe it's about building a relationship, building a partnership that will not just provide initial funding, but work together to develop and grow the business into the future. Naomi, can I ask you to move on, which I think is more or less the final slide. And it's, as I'm saying, we're looking to build a partnership and help you to grow and develop your business going forward. And that's what we're all about. And hopefully that's what the whole banking market's all about. I think the days of that standoff relationship between banks and customers has gone. Hopefully it disappeared in 2008. And we're having to build confidence and build trust again. And that's what we're looking to do at Unity. So that's me, I'm afraid. I've tried to keep it short and looking to take on any questions.
Thank you so much. I'll pull the slides back down just for now so we can see people's faces. It's always nicer than just looking at the slideshow. I was writing down lots of questions. It's funny, actually, I just written down the word partnership and then you spoke about partnership. So it's always really important, I think, to us. I'm encouraging people, if you've got any specific questions, do put them in the chat and I'll bring them up. But I'm just going to try and pull out, I think, questions that are useful for people as well. So I guess I wanted to kind of pick up that, I guess to some degree the presentation split between the kind of more the day-to-day transactional banking in terms of what we're used to in terms of perhaps the equivalent of the current account and the day-to-day, and then obviously the raising investment side. So I thought it was perhaps useful to understand some of those kind of differences, and that there might be people interested in both, there might be people interested in one or the other. And then I'll perhaps come on to the relationship, if there is one, between those two, if that makes sense in terms of questions. So just picking up on that kind of the day-to-day banking aspect. I mean, I think it's my experience of seeing the kind of ethical banking sector develop is it perhaps started more in the investment space and over time has put more of the kind of current account approaches in and the day-to-day banking. In terms of that offer to organisations on the ground, is that something in terms of, you talked about having different hubs, and obviously you've got the Post in Scotland. If people in Scotland were interested in that Unity Trust Bank, and we know everything, a lot of stuff's gone online, could you just say a little bit more about that kind of the offer around the more transactional banking? And then I just wanted to pick up, is there a link then between that and the investment side? Is it helpful sometimes if people are looking in the future to raise investment, that obviously you've got a good understanding of people's day-to-day accounts if they bank with you as well, and just how does that relationship work together?
Mark, you okay if I try and field that one?
Yes. You can field them all.
Yeah, well, pick me up if I don't answer your question. I'll try and answer the question insofar as from a transactional banking, we have an operations team that's based out of Birmingham. It's a telephony team, and for non-borrowing customers, their point of contact, if they can't resolve their queries or what have you through the technology that's available, internet banking. We don't have a mobile app, but that's in development at the moment. But you can make payments. If there's any need, you need to speak to a human being. We have a UK, our operations, our call centre, our telephony team based in Birmingham, and I will get the number wrong, but it's within 10-15 seconds we sort of answer every call, and then you're speaking to a person. So I think we all get frustrated where you've got to press 1 for this, press 205 for this, etc. So we'd like to think that there's a human voice from a transactional side of things. And I think that the relationship between the team there is not only is there a succession plan, people who want to grow and develop their own personal careers from operating through a telephony service through to assistant manager into relationship manager role. The relationship as such is that if we bank an existing customer, albeit it may be a creditor working one, we will inevitably know more about them than if they were a new to bank customer wanting to borrow for the first time. So the relationship as such is that our understanding of the enterprise is aided if their transactional banking is with us, albeit it's not a prerequisite. I mean, if somebody wants to borrow from us, we don't say you must have your transactional banking. We're not allowed to do that, and we wouldn't want to do that because our offering may not be as sophisticated as some other lenders, and therefore transactional banking one bank, borrowing another. But it certainly aids discussions if we know more about the business or the enterprise already.
No, thank you, John. That's helpful. I just think it's useful for people on the session to understand that that's the case. And I'm probably very biased in my response, but if you're phoning a call centre in Birmingham, you're bound to get a friendly voice. That's all I can say. You're probably picking up on my accent now as I speak, but it's where I grew up. So I'm confident you'll always get someone friendly if you're phoning Brum. Thank you. Again, for me, I always say to people when they're looking at finance options, again, you talked about the mobile app in development. There might be some bits that perhaps aren't as on offer as some of the larger banks, but you get it's the relationship side, I think, that you get with a smaller team that can sometimes be different. You know where the call center is. You get to build up relationships with the relationship managers. And my experience, again, in smaller organizations is that while there is, as she's noted, still movement between different post holders, people tend to be in similar roles for perhaps a slightly longer time. So that relationship, in my experience, carries through a lot more sometimes. I don't know whether that's been your experience.
I agree, Naomi. I think it probably brings with it a little bit more ownership. So again, I've worked at organisations where it's like an oil tank, and there's lots of different silos where I know how to do my box, my job, but anything outside of that, I'm just going to hand you off, and I don't take responsibility for it, because we are all so small. We all know each other really well. You can just pick up the phone. I mean, I report into the CEO. Mark his 2 stages from reporting into the CEO. There'd be about 100 layers before I got there at RBS. So if I've got an issue, or the customer's got an issue and I want to raise it, it's a quick phone call. So it allows you not only that people own things better, in my opinion, but you can respond quicker and you can resolve things hopefully at the first port of entry, rather than I'll pass you on, etc.
No, very much. And I think, I hold my hand up. I run sessions for other organisations on looking at investment and social investment for organisations. So it's a field I know a reasonable amount about. And I always say, and Mark, you talked about kind of the cost of finance. And of course, the cost of finance is critical when you're looking to borrow money. But actually, for me, it's looking beyond just the pure costs. It's very much the relationship. It's if things fluctuate, have you got a partner? It's back to that word partnership, that can work with you as situations might fluctuate. And that comes better, I think, from a relationship. So really understanding what there is that the bank can offer that is beyond just the cash itself can be quite important. And I didn't know whether, Mark, you touched on partnership in terms of, and you talked about bits of support. I think you talked about support around budgeting. Is there a bit more in terms of, you wanted to just say in terms of, what would you say is that additional support that maybe can come from Unity as well as just the cash, in terms of expanding a bit more around budgeting, the business planning?
These are really, really important areas, I think, Naomi. And the one thing I would say about Unity is that it's very much driven by relationship, and the relationship managers, as John touched on before, are all based from home, so we're very mobile, and I cover Scotland. But the reality of that is, I've got some customers in Aberdeen, but the reality of that is it tends to be in the central belt, the bulk of our customers, so it's very accessible. And we've got customers who are in startup businesses or very recently started up businesses, social enterprises or charities, to the larger organisations like housing associations, Lint House, which is part of our pack there, who are very sophisticated and long-standing organisations. So the smaller organisations or the startups or the recently started, we're happy to sit down at any time and just say that, where do you want to take your business to? Let's help you. We're looking for budgets, we're looking for projections, we're looking for plans. Let's help you. You tell me where you want to go, and we'll build a package around that. We'll build we'll help you with your projections, we'll help you with your business planning. And holding your hand is not the right expression, but it says what we try to do is literally hold somebody's hands and take them through the various stages of borrowing.
Walking alongside someone.
Sorry?
Walking alongside someone.
Yes, I think that's important, and we seem to do very well with that. And the customers that we have like that, and they have my personal or my mobile phone number, so I can be contacted at any time. And I think it is important. John mentioned it earlier. We're not a touch tone or touch button organisation. You're straight through to me. You're straight through to John, and we'll pick it up and deal with it there and then. It's a very personal bank. It's a very personal kind of service.
No, thank you. It's great. There's a few specific questions that have come up in the chat, and you might have seen them before I asked them. I always like to think if you've had the chance to look at them before I pose them, it's good. So that's why I always rattle on about other things while they're coming in for a little bit first. So I'm perhaps going to come to I'll come to Brian's question more towards the end as a closing question, but a particular question's coming just around that kind of, I guess, looking at asset lock and looking at community interest companies limited by shares. Is there a particular view taken by Unity, or does the legal structure not matter in terms of how that view of obviously ownership of assets and asset lock, does that make a difference in terms of borrowing?
Will I take that, John? No, is the short answer to that. Whether it's limited by shares or limited by guarantee, it's not an issue for us at all. No.
Well, there you go. You can't get a more straightforward answer than that, can you?
I was trying to think how I could pad that out a bit, but I don't think there's any point padding it out. It is what it is. We're happy to work in either in any environment.
Yeah,
and I think there's new things coming on as well, Naomi, with LLPs and I think we will continue to see new styles and new vehicles coming on board as the market develops.
I think you're right. I'm doing my acronym buster. Limited liability partnerships is my acronym buster moment for today's session. Yeah, I'm absolutely with you. I think we're really seeing a changing sector in terms of how people are using different legal structures. And I think, again, what I always say to people when I'm talking to people about investment is, particularly banks that specialise in investing in social organisations, they'll probably understand our legal structures for social enterprises perhaps better than some of the relationship managers that predominantly still deal with private limited companies. It's because legal structures in our sector can be very complex. So I think it's, for me, that's always one of the real benefits of looking at a social lender. They tend to understand the structures that we use in our sector perhaps a little bit more. It's not to say others don't. I like to give a fair representation, but I do think they understand it a little bit. There's another interesting question that's come in from Edward, and I got this actually on my list of questions, and it's inevitable, I guess, that the COVID question is there because we've seen lots of changes, I guess, for organisations in terms of trading opportunities, fluctuations in income. Some have grown enormously through COVID and some have really challenged. What's been your take and what's been your experience at Unity as you've seen people perhaps looking for finance in the last 12 months? And how do you think it's going to affect people raising finance moving forwards in terms of applicant borrowing?
I think it's been a learning curve for all of us. I mean, it's unprecedented what's happened, and we've had to adapt like every other enterprise or every other business has, and try and change its working model. We've all suddenly gone, and whilst Mark and I are used to working from home, a lot of the head office staff hadn't, and they've had to adapt, as many organisations have had to adapt. And there's been businesses that have thrived and businesses that have struggled. And I think the approach we've taken to customers who are seeking funding during the pandemic is if they're an established business, what was their business looking like before, and do we anticipate when that normality, what that new normality looks like, is returning, do we anticipate that they are operating in a sector that we could reasonably expect them to return back to some form of normality? Because as Mark touched on before, it is a partnership. Why would, and again, this is probably going back to RBS days in the bad old days, why would we want to lend or advance funds to individuals or to enterprises if they're going to struggle to repay it? So actually understanding the journey from where you were before, the implications of COVID on their business, but what are the expectations going forward? it's just part of that listening and understanding and questioning techniques in terms of risk. We've not extricated ourselves from any sector as a consequence of COVID. Naturally, some sectors have needed more support than others, and we've tried to do that via either additional funding or capital holidays on existing borrowing, things such as that. But there's no hard and fast rule, because I wouldn't like to say we're making it up as we go along, but we're learning as we go along, and we're learning as customers give us more and more experiences. If that makes sense.
I think Naomi, if I can just pop in for a second there. It's been a very as much as it's been a challenging time, it's been very interesting. But what I have noticed is, particularly from our existing customers, they've almost got to the gate before we have with COVID. They've tried to understand it and tried to manage their business very much with COVID in mind from day one, and how long COVID's going to be there for. Nobody knew, but I think the businesses have been trying to take steps, or the enterprise have been trying to take steps early on, and we've been more or less a sounding board as much as anything else. We've had the phone calls, we've had the visits when we could have visits, but certainly on things like Teams or the medium we're using just now, we've done an awful lot of that, and I feel we've been more of a sounding board, and we've learned as much as our customers have learned. And we've tried to adapt our style of business, if you like, to suit the particular needs of that customer, whether it be housing associations will have a different need from smaller enterprises that are working with the community, but everybody has had their unique problems and difficulties and challenges. And I think we'll have come out of it as better lenders than when we went into it. And possibly our customers will come out with broader horizons than they went into it. So there's been a lot of benefits as much as a lot of difficulties, I think.
Yeah, and again, it's that sense that, you know, an organisation ending up defaulting is no good for the organisation or for the lender. So actually, it very much has had to be a case of everyone really working together to try and pull people through a situation that none of us have been through before. So yeah, well, we're not just making it up as we go along. We've not been here before, so we're all having to bring that kind of new flexibility and new way of working, I think, into this that we've never had to do before. I wanted to just ask a question, and there's still a few coming in, I haven't forgotten, but I wanted to just ask a question about risk. And I just wonder whether, do you think when we're lending money to socially based or orientated initiatives, we look at risk in a slightly different way, in the sense that we're not just looking at financial risk? Do you take on board kind of social impact that you're trying to make, or is it still very much a kind of financial transaction at the point when people are coming in asking for money? Like, how do you balance kind of the social side with the financial?
Will I start that one off, John? Yeah, it's very interesting, Naomi, and it's a very good question. And I can relate that back to when I joined Unity and first started looking at social enterprise proposals and charitable proposals. They're definitely not what commercial bankers would normally look at. We would look at historic accounts previously. Businesses were run purely for profit. Whereas the sector we're talking about just now is not for profit organisations, and I think we've got to understand that the money that's generated is used for social causes and for good causes, and it's not there just to simply generate profit. So it's a different kind of risk, I think, and that brings us really onto the planning for the business. And let's call it a business or an enterprise, because they are all businesses now. So a lot of social enterprises generating, significant sums of cash. So the planning stage has become more important, and the risk, if you like, is all in the future planning and where you're going to develop your business from. What are the community needs, and are you accessing these needs? Are you satisfying these needs? And these needs will bring along the sufficient funds to support the business. It's not just about bricks and mortar risk or profitable risk, and it's understanding, I think, the purpose of the enterprise. And the enterprise is looking at the same thing as the bank is. How can they sustain themselves going forward? So if we can identify that route, that's the risk, I think, for social enterprises, is identifying where the income streams are going to come from, whether it's coming from grant monies or contributions, donations, or whatever, charitable activities. It's identifying these and understanding how strong they are and how sustainable they are. That's where the risk is. It's not so much in the bricks and mortar or the widgets, making so many widgets. It's just, I think there's a lot more understanding of the business.
Uh-huh.
I think the only thing I would add to that, Naomi, is if you think of almost like a scales of business risks and financial risks, if the enterprise has got higher business risks, logically you'd want to take, and a bank would want to take lower financial risk. So that could influence the loan to value against the property, because the business risks might be a bit unstable or uncertain. However, if those business risks are stable, it's established, it's fairly defined how their revenue is going to be determined, you can probably take a better view in terms of the financial risks and the funding that the enterprise may need, can move further up that curve. So we still have to make sure, if we're advancing funds, that it's safe for ourselves and for the enterprise itself, because if we're not comfortable, they shouldn't be comfortable, and vice versa. So we still have to have an element of financial risk assessment in there, but it is recognising that you're not going to get a set of accounts that show a huge amounts of retained profit, because it's not that type of enterprise. So we do understand it. It's how we articulate our risk assessment. I think that's important, is how we articulate that to a prospective new customer, to say, this is how we're going to look at this, and this is why we need the information you're going to supply us with.
No, thank you. That's really helpful, because I think, what I tried to do in this session is I'm trying to give social enterprises a sense of what is it at the point when they're looking to approach a bank, what is it that they're looking for? What are the kind of questions that they're going to come across? And again, I always say to people, my experience of working with lots of people that lend finance in the social spaces, it's very much about working with organisations. You probably won't answer every question at the point when you apply, but I don't think that's different in any sector. Actually, there's always questions that will come back from the lender, whether you're a private business, a charity, a KIC, there's always going to be questions that come back. So, I always say to people, don't be frightened about making those initial approaches to people. No one will lend you money if they think that you can't pay it back. It's in no one's interest. And if they think it's possible, they'll work with you to try and make it possible. And that's very much the sense I'm getting out of today. I wanted to bring it back. We've got we always said we'd only do this for 45 minutes, but I've always got loads of questions when it comes to finance, so I'm sorry. I'm going to ask two more, unless any questions just come in the chat. One is just very specifically about kind of Scotland. So is there a particular relationship manager for Scotland? Is there a particular contact, or does it come through the head office and then it's more sector related rather than geographical related? Or how do you just manage that in terms of people who are based in Scotland?
Well, I was the only Scottish relationship manager up until a year or so ago. So I took everything, and it comes directly to me, or there's occasions where somebody an enterprise will have gone onto our website, and it goes into Birmingham, and then it will come back out to me. So either way, it usually comes out to me directly. But I've got a colleague, Scott Hutchison, who's based in Edinburgh, and we split it up a bit. He does a lot of the healthcare style of businesses or enterprises, healthcare, pharmacies, doctor surgeries, anything healthcare related. I tend to be more property related, and it's things like social housing, anywhere really, I suppose, where it's property based. So it will either come to Scott or myself, and location in Scotland doesn't matter. We're easily accessible.
No, that's great. Well, you'll have seen there's been some nice favourable comments about the presentation today. So I think people will be pleased it's you, Mark. So that's always nice to know, isn't it? So
that's lovely to know, yeah.
Well, I think so. And I'm also pleased
to whoever's been kind to me, the checks in the post.
It's nice, I think, to hear. Well, I like giving good feedback. It's positive. I'm also glad that it's perhaps you, because you can probably answer this question really well in terms of my last one. And I think it's, we talk about kind of, and it'll be my last question unless there's any that come up in the chat, and then we'll do some final, just closing comments. Sustainable organisations and the acquisition of assets can be quite important in terms of an organisation becoming sustainable and having that kind of, longer term view in terms of what they wanted to do. And I just wondered if there was just a comment from you, Mark, given you've got that strong focus on the asset side, what would the pointers, or what would you say to organisations that are perhaps looking at whether that's buying a building, because that's the obvious kind of asset that people look at? What difference do you think that makes? And I think of that broadly in terms of, what difference does it make to future lending if it's on the balance sheet? What difference does it make in terms of if people see that you've got something that is an asset that you own? Does it make a difference on how you're viewed in terms of doing business with? So what do you think the real benefits of asset ownership are for social enterprise organisations? It's quite a big question.
Yeah, no, I think that's an interesting question there, and I tried to touch on it a little in the presentation that I gave about borrowing. And the round tables that I've sat at for social enterprises and some of the seminars that I've attended have all been about encouraging social enterprises to borrow. And it is always easy when you're borrowing for yourself. It's fine, you go and get a mortgage or a personal loan for a car or whatever that. It's easy. But when you're borrowing on behalf of a social enterprise, it's more difficult to commit, and it's having confidence to commit. And I think if you consider that paying rent on property, whatever the rent is, if you can secure a building for the same, or in many occasions less than a monthly outgoing, then it strengthens your balance sheet, it strengthens your confidence, it gives you something more sustainable and more concrete to work from. I think it's one of the best things a social enterprise can do is own their own building, and from there it can develop into, as the enterprise develops, it can develop into other areas and buy another. It can be shops, it can be offices, it can be anything. But I think when you look at the successful or more successful social enterprises, they've all taken on debt and bought the properties. It certainly gives the balance sheet a lot more strength. And I think it gives a lender, whether it be us or whether it be another lending institution, it gives more confidence in the enterprise. There's a commitment there. There's a look forward. So yeah, I think it's important, and I would encourage any social enterprise to look at that as a go forward. And that's where I think we can help. We can sit down and encourage and provide that confidence and provide that understanding that you're paying rent, which is renewable every 3 years on a lease, or every 5 years, wherever it is, and rent increases over the period. Sit down. We will do it. We'll profile a loan over 20, 25 years possibly.
No, thanks.
Just impacts on your cash flow. Yeah, sorry, Naomi.
Oh, sorry, I thought I interrupted. I had a delay. I thought you'd finished. So
no,
the joys of internet.
I was thinking.
You've been quiet for too long. I wasn't expecting it, Mark.
No, I was trying to think on my feet. I'm not the best at that. So yeah, just to sum up, I would encourage, and it's a conversation. It may not happen. The decision may be that we're not going to buy. Or we're not going to buy this year, we may buy next year. It's a conversation that we should be having as early as possible.
Absolutely. I mean, I have to say, I share a lot of your views in terms of the confidence building it gives you, the perception that it gives people, even in your community and people around you, that you're there for the long term. I think there's so much. And I think, you know, if we think in terms of the current situation in COVID, I mean, I'm down here in Dumfries and Galloway, and we've got someone looking to buy lots of our empty retail stores in Dumfries through a social enterprise. And there's actually lots of opportunities out there, I think, right now to be really looking at that in terms of, you know, the Scottish Land Fund potentially coming back on board this year. So there's all sorts of opportunities that I'd encourage organisations to look at, because I do think that asset ownership does give you that strength for the future. And then my last question, I'm going to come back, and it was one posted in the chat, and it's going right back to the beginning. So obviously, if we're looking at asset ownership, it tends to be organisations perhaps a couple of years down the line. In terms of organisations that are just looking to launch a social enterprise, could you just say a little bit about is there something that Unity has got a strength with in terms of just helping people at that very early stage? And then once that question's answered, I was just going to ask you to do a couple of closing remarks. So I guess it's probably more of a transactional banking. Yeah, you take that one, Mark, and then we'll do some closing remarks from you both.
Again, the short answer to that is yes. And I think certainly at the early stages, we would try to invite, it depends very much on what sort of cash, if you like, input coming from the social enterprise. As we've touched on previously, a bank will lend whatever, loan to value basis, that the covenant, let's say, is 70% or 65%. So the balance has got to come in from the social enterprise, or more importantly, partially the social enterprise, or with another grant provider like Big Society Capital or Big Lottery. They may provide grant funding to make up that 30% or 35% difference, and we would encourage we would encourage social enterprises to look at that route in the first instance and secure the amount of cash that they have to bring to the table. And as I say, it doesn't have to be from them in particular. It can be a mixture of grant funding or whatever. So yes, we're more than happy to look at it. But I think it's important to explore the other avenues for grants. And we look at a lot of startup situations, and one recently, which without naming names, but it was for amputees, for example, and it came out of the Afghanistan war for veterans and also for sufferers of meningitis, and it was giving the patient, for want of a better expression, the confidence to get back, to rehabilitate them and get them back into the market. Now that enterprise didn't have any cash, or they had a small amount of cash. Unfortunately, it hit us just as COVID came in, so we're still under discussion, but that we encouraged them to look at other routes for grant funding. And they've managed to pull some cash together now, I believe, and they'll come back to us. And rather than rent a building, they're looking to purchase. So yeah, very much so. But again, we go back to where your income stream is going to come from to support that. And it's not, we're putting ourselves in the social enterprise's shoes and saying, we want you to succeed, but in order for you to succeed, you've got to identify how you're going to fund this going forward.
Yeah.
So there's a whole mixture of things in there, I suppose, and that was a long answer to a short question, but the short answer is yes, we're prepared to look at startups, yeah.
To be fair, you've also given us some short answers to some long questions, so I think we're probably about equal on that now, so that's all good. Just any just closing remarks? There's lots of comments just coming through in the chat. People have found the session really useful, so thank you both for joining us today. I think we'll be coming back to these finance issues, as I said, in our webinars, but perhaps I'll come to some closing remarks from you, John, and then Mark, giving you kind of the guy in Scotland, just some closing remarks maybe on how, if people need to get in contact with you, or just what's the best approach.
Yeah, I mean, all I would say, Naomi, is thank you again for giving us the opportunity to talk to some of your members. more than happy that for those slides to, if you want to send them out to your members, it's got our contact details on the back in terms of email and things like that. We see that your organisation has been one of those parties that will be able to help the members understand, is this a bank funding, is it grant funding, and direct the member or the organisation to the right people in the first instance, really, rather than them chasing and tail doing it directly themselves. So no, happy to have done the webinar. More than happy if there's certain topics or your members have certain things that we can provide a little bit of support on or assistance with, whether it's mediums such as this or anything else you can think of. So thank you again.
Great, well, thank you so much. And Mark, just some final thoughts from you.
Yeah, I'd like to thank you, Naomi and Duncan, for the opportunity, and thank you for everybody that's attended the seminar. And I'll apologise for stuttering my way through it. It's a first for me, and I think it's a first for John, but I thoroughly enjoyed it. And you know, we're open for business, and I'd be delighted to talk to anybody and help where I can. And if we as a bank can't help, we will certainly try and point customers in the right direction or in another direction, and we'll help where we can. There's no doubt about it. That's what we're here to do, and this is the space we want to operate in. So yeah, please, I think our details are on the slides there. Happy to be contacted at any time, either email, telephone call, more than happy.
Great. Well, what I'll do is I'll draw the session to a close, but I'll just pull up the slideshow and get the contact details up just so that they're on the screen before we close, and we can share them round. I know it's a big slide set when we send them round, so if there's any challenges when people get them or they can't open them, do just contact us back at Social Enterprise Scotland, and we can make sure that you get those contacts as well. And thank you both for joining us. I hope you've enjoyed your first experience on the Zoom webinar with us. So I hope it wasn't too painful. Thank you both very much.
Thank you.
Bye.
Bye-bye.